Hello everyone, a very good evening to all of you. Can you please confirm whether my audio is audible and whether my video is visible or not? Can you just check whether the screen is visible as well? Please confirm. Good evening, Danush. Yeah, no problem. That's our responsibility. So we can do anything for you. So whatever you want, that is our responsibility. Okay, excellent. Okay, Chandu, is it fine now? Are you hearing me? Okay, hi Sham. Hi Prabhas. Hi Sanjay. Hi Lucky. Okay, hi Vikas. Everyone. So, how was your corporate accounts and auditing paper done? So, can you please just confirm whether it is expected or not, or is it very difficult to attempt? Can you just please confirm? Mm-hmm. How was the paper? Hi Nohit. Hello everyone. Good evening. Hello Srujana. Hi Ravi Kumar. Hi. Okay. Okay. I'm seeing Sanjay is replying the paper is pretty good. Okay, good to hear. Yeah, I know that. Actually, Verma sir have predicted most of the things correct. So I have also checked that most of the students have continuously messaging Verma sir that paper is very much came from your expectation only like that. So it's very happy for us to hear. Okay, super. Excellent. Mm-hmm. Nice. Excellent. Okay. Mm-hmm. Okay, guys, no problem. So let's just wait for 2 minutes and then we'll start with the session. Okay. Hi, Raghava. Hi, Dhanush. No problem. It is very common that one of the papers will be definitely tough. You just have to understand one thing. If the paper is tough, it is tough for everyone. So you have to listen this and you have to remember this. If the paper is tough for you, it is tough for everyone as well. So what you have to do, most of the students after seeing the paper itself, they will quit. But only those students who will attempt and continue till the last, there are high chances that they are going to clear the exam. So if one paper is tough, you can just sit back and relax because all the other papers in the group will definitely be easier. So, okay. Mm-hmm. Yeah, it is very common in these professional exams like CA or CMA. They will definitely give one paper as tough, but you just have to understand that. And if the paper is tough, that's what I'm saying. Most of the students will quit after seeing the paper itself, but very few students will attempt. Even if the paper is tough, only just one question or two questions may be tough, but you just have to identify those questions and you just have to simply leave those things so that it will be easy for you to focus on other questions through which you can easily score a minimum of 60. So like that, you have to plan. Okay. Questions 2 to 4 predict చేయండి sir. Practice చేద్దాం. Definitely Sanjay. Definitely will do that. Okay. Fifth question also. Sure. Set off carry forward. Okay. Fine. Sure Sanjay. Sure. If time permits, definitely we'll solve the questions. Don't worry. Okay. So someone is N, he's saying that he have not prepared DT up to now. By preparing now in this war room, can I pass? Okay. So what you have to do is during this war room, whatever concepts which I am saying, you please mention it somewhere. Once it is completed, I have already released exam oriented batch which is in mixed language for Telugu and English. And another super 35 questions also I have released, which is in full English. So you can refer to those concepts. If you have any doubts, then there are high chances that you can easily get minimum 25 plus, even if it is the first time. That's my assurance, because most of the things I have collected and compiled, everything is from the institute's publications only. So yes, everything is shared in the PDF. Danush, everything is shared in the PDF. Sorry, everything is shared in the Telegram. So students can add into the Telegram channel. So if any student is there, can you please share whatever the PDFs which I have shared in the group? Everything is pinned in the Telegram group. So if any student can share, that would be very much helpful. Okay, 1 second. Let me just share once again if possible. Everything is pinned in the group, by the way. Just give me a moment. Yes, I have shared all the files once again in the Telegram, so you can quickly check those things. Telegram link also. Let me just check. Can any of the student please share the Telegram group so that she can join? Okay. We are getting delayed. So let's quickly just start with the direct taxes. I don't want to waste your time, guys. So let's quickly dive into the things. So now the next paper, which is paper number 7, which is direct and indirect taxation. We all know that the first question consists of 15 MCQs. So out of this, usually they are asking 6 MCQs from direct taxes and 9 MCQs from indirect taxes. Okay, fine. So this MCQs, I have released a separate video in the name Bullet MCQs, which will cover all the important MCQs which have asked in the previous attempts and also in the institute's publications as well. So you can just easily go through those things. So these MCQs will be sorted. Other than this, the next 4 questions they will ask from direct taxes. That means question number 2, 3, 4, 5. Okay, so here I have summarized whatever the questions which they are asking based on the past experiences. So the every question consists of 2 parts, part A and part B. So the first part, second question, part A, they will generally focus on this residential status, which is very easiest chapter according to me. So one can easily score a good amount of marks in this residential status. And 2B question, they will ask from salaries chapter. Yes, Manasa, I will be solving questions as well in this. So I'll be just explaining the important concepts along with the questions also. So you can just focus on what I am saying. Good evening, Tejesh. Good evening. So check this. 3A is from income from house property and 3B they are asking from PGBP. This is also very easiest question according to me. I am hearing from most of the students that they are taking this PGBP as a choice, but you should not do this, guys. Trust me, during this VAR series, whatever questions which I have explained in the session, if you just go through those concepts and if you solve at least 2 questions, then whatever the question which they have asked in the exam, you are going to solve it. At least you can get easy 4 marks out of 7. So that's how I can give a guarantee for. So the next one, 4A and 4B. 4A question, they will generally ask from capital gains. This time capital gains is very important because entire capital gains is totally revamped. So according to me, I am definitely expecting 1 capital gains question plus at least 2 MCQs I am expecting from this capital gains chapter. So the next one, 4B, they are focusing on income from other sources, which is also very small head of income and very easiest head of income. So the last one, 5A, is related to set off carry forward of losses and 5B is related to default versus optional tax regime. This is also very easiest question in the planet, I can say. So out of these 4 questions, you have to answer, you have to be very confident in at least 3 questions. You have to select your questions in such a manner that if you want to leave 2A as choice, don't prepare for 2B. In other words, if you want to attempt this income from house property, you should not ignore this PGBP because there is no point in ignoring PGBP if you want to solve this income from house property, which means if you want to take B as choice, Even if you are very much confident in A, that will not serve the purpose. So what you have to do is you have to select the questions in such a manner that it is beneficial, even if you leave the other question as well. So out of these 4 questions, we can easily analyze the things. So first, what I will be doing is, first let us solve this second question, which consists of 2A and 2B as well. So if you are fine with this 2A and 2B, 14 marks are there in our pocket. Correct? Yes. So first, let us start and let us focus on the second question, which consists of part A and part B as well. So what you have to do, first let us focus on these 2 parts, and then easily you will get a minimum of 14 marks. After this was completed, we'll be immediately moving with this 5A and 5B question. 5A, they will focus on set of carry forward of losses. 20 minutes is what I will take to explain all the concepts related to set off or carry forward. And I will definitely explain one problem for this set off or carry forward of losses. Easiest question and super important question according to me. This default versus optional tax regime. All you have to do is, I have just summarized the entire differences between optional tax regime and default tax regime in a single sheet of paper. I will take only 30 minutes to revise, and I will definitely explain at least one question from that. You just have to understand the differences between optional tax and default tax. Along with that, you just have to remember the tax rates for this optional and for this default. Other sources I will cover no hit. Don't worry about that. You have to just focus on whatever I am explaining. As explained, I will definitely cover this 2A, 2B. 5A, 5B also I will cover. 3A I will cover completely. 3B, I will focus only on important concepts. Again, I am saying you should not ignore PGBP. You can ignore some topics from PGBP, but you cannot ignore entire PGBP. So this PGBP, I will be explaining I will be explaining only important topics. IFOS also I will explain full concepts along with at least 2 questions. This capital gains also I will be focusing only on very important aspects. As I am saying, this capital gains is the most expected question because the entire capital gains are revamped right now. So that's it, guys. Without making any further delay, let's quickly start with the residential status, which is very important. So let's quickly open that part. Just give me a moment. Yes, guys. So let's quickly check this chapter. Residential status and scope of total income. Residential status and scope of total income. Don't worry, Dhanush. For IDT, Mandeep sir will be coming and he will be taking over from 9 p.m. So till 9 p.m. I will suggest all the concepts relating to direct taxes, and once I was done, Mandeep sir will immediately join and he will cover and he will give you entire clarity when it comes to indirect taxes. So yes, guys, just a minute. If you check this, you just have to remember there are totally 2 types of incomes. First one is Indian income and second one is foreign income. Sir, what is the meaning of Indian income? Indian income is very clear. Indian income means income if either accrued in India or income if either received in India. If either income is received in India or income is earned in India, that is called as Indian income. That is called as Indian income. Second part, foreign income means income should be accrued and received. Both should be outside India. It is pretty clear. It should be, if it should be called as an Indian income, either income should be received in India or income should be earned in India. But if you have to call any income as a foreign income, income should be both earned and received outside India. So this you have to very much clear. After this, the most important thing is this one. according to your residential status, you have to identify which incomes are taxable for you. So the very first important thing, guys, you have to respond R and O are shortly called as resident and ordinary resident. Resident and ordinary resident. So the first one, in case of individual or HUF, because only for individual or HUF only we are having this ordinary resident concept. And in all other cases for resident, always remember, guys, global incomes are taxable. Always remember, guys, global incomes are taxable if a person is resident and ordinary resident. Okay. If a person is a non-resident, you have to remember this. Only Indian incomes are taxable for that non-resident, which means what? Obviously, foreign incomes are not taxable for non-resident in India. You have to remember only 2 points. For resident and ordinary resident, only global incomes are taxable. But for a non-resident, only Indian incomes are taxable. But this is the most important question, which is for a resident but not ordinary resident, Indian incomes are always taxable. But when coming to this foreign income, there is only one special income which is taxable for him. And that special income is very simple. If that person is having a business or profession which is set up or controlled from India. See, guys, the person is having foreign income, but that foreign business is controlled from India. Therefore, this special foreign income is also taxable for RBNOR. Other foreign incomes are not taxable even for RBNOR as well. To summarize, for RBNOR, Indian incomes are always taxable. And when it comes to foreign incomes, only one special foreign income is taxable. Sir, what is that special foreign income? If your business or profession is set up in India, then that foreign income is also taxable for RBNOR, which means what? All other foreign incomes other than this are not taxable for resident but not ordinary resident. If such RBNOR is not having control from India, then it is not taxable. But if the person is non-resident, guys, only Indian incomes are taxable. Only what are taxable, guys? Indian incomes are taxable. Now I'll ask one question and I am expecting at least 5 to 10 students to get the reply. So tell me, guys, for ROR, which means for resident and ordinary resident, what incomes are taxable? Please reply, guys. What incomes are taxable for ROR? Is it global incomes or is it only Indian incomes? Please respond. I'm waiting for your response. Okay. For ROR, yeah, exactly. Super Priyanka. For ROR, excellent Jahnavi. Pratyusha, super. Only global incomes are taxable for ROR. But for non-resident, only Indian incomes are taxable. Excellent Pooja. Excellent Nohit. Super, super. Thanks for your response. Excellent. So next one, guys. Now let's quickly come to this basic conditions and additional conditions. This is the most important thing. Remember, guys, we have only 2 basic conditions and 2 additional conditions. See, this is the most important word you have to remember. B1 or B2, they will say. B1 or B2. This is residential status of individual. And the second one, they will say additional conditions A1 and A2. What they will say? A1 and A2. Which means what? Out of these 2 basic conditions, even if one basic condition is satisfied, the person is called as resident. The person is called as resident. Out of these 2 basic conditions, if both the conditions are not satisfied, then the person is treated as non-resident. Dhanush, if the person is a non-resident, you will not check control and all. For non-resident, only Indian incomes are taxable. Any foreign income for non-resident is not taxable for non-resident. I hope you have understood the question, Danush. For non-resident, only Indian incomes are taxable. Foreign incomes, you will not check even that. So fine. Now let us quickly check this basic conditions. Don't worry, Murari, we will solve that question. You will easily understood that point. So the first basic condition, guys, individual should stay in India. Individual should stay in India for how many days? 182 days or more in the current previous year. Which means what? If any person is staying in India for 182 days or more, in that case, B1 is satisfied. Guys, can you please reply in the comment section, in the chat section? For B1 to be satisfied, how many days should the individual be stayed in India? Please reply, guys. How many days individual should be stayed in India in order to satisfy B1? Okay. How many days he have to stay in India? Okay. I am receiving the answers. Super Nohit, Super Danush, Super Prabhas, Dikshita, nice. Excellent. He have to stay in 182 days or more in the current previous year. And for this B2 to be satisfied, he have to stay in India for 60 days or more in the current previous year. And not only that, guys, he have to stay for 365 days or more during last 4 immediate previous years preceding the current previous years, which is pretty simple, guys. Basic condition 1 is saying individual have to stay in India for 182 days or more, whereas basic condition 2 is stating, Arey Baba, if that person should be stayed in India for 60 days or more and 365 days or more during the last 4 immediate previous years preceding the relevant previous year. These are the 2 basic conditions you have to remember, guys. Even if one basic condition is satisfied, the person is called as resident. If both the conditions are not satisfied, then the person is called as non-resident. So super. So now you have to understand 2 cases. These 2 cases you have to remember, very, very important. First one, if the person is an Indian citizen and he's staying and he's a member of crew of an Indian ship, or if he's an Indian citizen and he's leaving India for the purpose of employment. If that person is leaving in India for the purpose of employment, in this case, you should not check basic condition 2. You should not check basic condition 2. I will be explaining 2 cases, guys. In these 2 cases, you should not check second basic conditions. Which means what? In these 2 cases, you will only check first basic condition. In these 2 cases, you will only check first basic condition, which is also pretty simple, guys. Second case is Indian citizen or a person of Indian origin. Okay, the person is an Indian citizen or person of Indian origin. He is usually staying outside India. He is usually staying outside India, but he have visited India during the current previous year. In these 2 cases, you will only check first basic condition. In these 2 cases, you will only check first basic condition. So super, guys. And after completion of this, let us immediately move to this additional conditions. Most important, first additional condition is individual should be resident in at least 2 out of last 10 immediate previous years. See, you have to check further. First, the person is a resident or not. If the person is a resident, then you have to check whether the person is ordinary resident or not. Then you have to check the person is ordinary resident or not. Sir, how will we check whether the person is ordinary resident or not? Arey Baba, by checking the additional conditions. Okay, the first additional condition is he should be resident in India for at least 2 out of last 10 immediate previous years preceding the current previous year. And the second condition, guys, he have to stay in India for 730 days or more. He have to stay in India for 730 days or more. In how many years, guys? In the last 7 immediate previous years, he have to stay in India for 730 days or more. So after this, let's quickly check this point. One point is the most important. Yes, guys, this one I have to say. Now I will explain modified B2, which is the most important. Modified B2. So check this. Indian citizen or person of Indian origin, if he is staying outside India but visits India during the previous year. The same point we have checked just now. Sir, in this case, B2 is not applicable. Yes, but you have to check one additional condition, guys. Sir, what is that additional condition? Total income you have to check. But while calculating the total income, don't take income from foreign sources. But you have to include income from business or profession set up or controlled in India. If it is up to 15 lakh rupees, then second basic condition is not applicable. See, just do this part. This is the same to same. But if your total income is up to 15 lakhs, please only check basic condition 1. Okay. But if it is more than 15 lakhs, then you have to check modified B2. You have to check modified B2. Sir, what is this modified B2? Very, very simple. For this modified B2, always remember one thing. Instead of 60 days, you will take 120 days. Instead of 60 days, you will be taking how many days? 120 days. Which means what? Individual should stay in India for 120 days in the previous year and 365 days or more in last 4 immediate previous years preceding the current previous year. The point is pretty simple, guys. This point is same to same there in B2. I mean, in that case where B2 is not applicable, that is the same point, but you have to check additionally total income. If this total income is up to 15 lakhs, second basic condition is not applicable. And if this total income is more than 15 lakhs, then you have to check modified B2. Then you have to check modified B2. So the next thing, sir, what is the meaning of modified B2? Instead of 60 days, take 120 days. Which means 120 days in the current previous year plus 365 days or more in the last 4 immediate previous years preceding the current previous year. So with this, we have completed all the basic conditions and all the additional conditions as well. And you also know about ROR, RBNR, NR and also non-resident. And you also know about global incomes and Indian incomes also. So without making any further delay, let's quickly solve one very, very important question which they will ask regularly in the exams. Okay, sir, where can we find that question? Don't worry, guys. I have already shared this PDF with you in the Telegram channel. So now let us solve this question number 1, which is the recent favorite question of your institute. They will ask this question n number of times in your exam. So please check this, guys. Okay, Dhanush, don't worry. I'll revise once again all the points. No worries. We have only completed 2 basic conditions and 2 additional conditions. That's it. Nothing more than that. And modified B2 is what we have completed. So super. Don't worry, Dhanush. I will revise everything. But please check this first question. Guys, you have to respond very quickly. If you respond quickly, I will complete more and more topics in the shorter number of time, which is most beneficial for you. So now what you have to do, you just have to respond according to the question. So this question is the most favorite question of your institute. Just give me a moment. I have once again shared the group link in the description in the chat box. So please check this and please join Bhargavi. So check this, guys. First one. Ram provides the details of the income. You have to calculate the income which he is liable. The first one they are saying he is an ordinary resident, which means what? He is a ROR. Second one, sir, they are saying he is not an ordinary resident, which means what? He is RBNOR. Okay. And the third one they are saying, sir, he is an NR. I mean, he is a non-resident, which means what? He is a NR. He is a NR. So, okay. Okay. So next one. First one, what they are saying is, guys, you already know this point. If the person is ROR, for him, global incomes are taxable. But if the person is RBNOR, for him, only Indian incomes are taxable. But one special income is also taxable. Sir, what is that special income? Even if the income is foreign income, if such business or profession is controlled from India, that special foreign income is also taxable for this RBNOR, which is the most important thing you have to identify. But always remember, guys, for a non-resident only, Indian incomes are taxable. Indian incomes are taxable. So first, let us check this quickly. Can some of the students please share the whatever the PDFs which I have shared in the group, as most of the students are continuously asking about that. So yes. So first one, salary received in India from a former employer of UK. Guys, here what they are saying, salary is received in India, which means clearly it is an Indian income. What you have to remember, sir, Indian incomes are always taxable for all. Whether he is a ROR, whether he is a RBNOR, whether he is a NR, Indian incomes are always taxable for all the persons. Indian incomes are always taxable for all the persons, which means what? This 1,40,000 is taxable for all the persons. Easy. So next one, income from tea business in Nepal being controlled from India. Income from tea business in Nepal but being controlled from India. Are Baba, this is a foreign income, but they are saying business is controlled from India, which means what? This foreign income is also taxable for RBNOR. For ROR, global incomes are taxable, but for RBNOR, this special foreign income is taxable, which means what? This is not taxable for non-resident. This is not taxable for non-resident. So if you check this 10,000 is taxable for ROR and RBNOR, but this is not taxable for NR. So super. So next part, this is a little bit important. So I want your 100% attention. The first one, interest on company deposit in Canada, 1/3 is received in India. The total is 30,000 rupees, out of which 1/3 is received in India. Which means what? 30,000 into 1/3 if you do. That is an Indian income, guys. Indian income is always taxable for all the persons. Which means this 10,000 is taxable for ROR, RBNOR and NR also. So the same thing they have explained, 10,000, 10,000, 10,000. But 2/3 is received outside India. Are Baba, here deposit is outside India. Received also outside India. So it is only taxable for ROR, which means it is not taxable for RBNOR and NR as well. So this 20,000 is only taxable for ROR. It is not taxable for RBNOR and NR. No, guys, this is the correct answer, Murali. If the business is controlled from India, it is taxable for RBNOR as well. So this is the right answer. So you can just follow, you can completely trust upon what I was discussing. Okay, it will be correct only. So this is the correct thing. So check one. Okay, next part. Profit from a business in Mumbai controlled from UK. Guys, business is there in Mumbai, which means the income is earned in India. which means what? It is an Indian income and therefore it is taxable for all the persons, which means this 1 lakh is taxable for ROR, RBNOR and NR as well. And the next part is past profit from a business in Tokyo remitted to India. Arey Baba, this is not current year profit. This is related to some earlier previous year's profit. Which means at the time when you have earned the profit itself, at that time only it is taxable for you. Now you are not again earning the profit. You are just remitting the profit, which means it is not taxable for you once again. Which means, this is profit for the year 2012-13 from a business in Tokyo remitted to India. At the time of earning in 12-13 itself, they have already paid the taxes. So now they will not pay taxes again. So this 2 lakh is not at all taxable for all the persons. Not taxable, not taxable, not taxable. So next one, income from a property in India. Arey Baba, property is there in India, which means it is an Indian income and therefore it is taxable for all the persons and therefore 45,000 is taxable for all the persons. And next one, income from a property in London but received in Delhi. Sir, income is received in India. Therefore, again it is an Indian income and hence it is taxable for all the persons. Which means this 1,50,000 is also taxable for all the persons. And next one, property is there in London but received in Canada. Oh, property is also outside India. Received is also outside India. Therefore, it is a foreign income and it is only taxable for ROR. Therefore, it is not taxable for RBNOR and NR as well. And the last part, guys, business is there in Zambia, but it is controlled from Turkey only, which means again it is a foreign income. Guys, here control is there from outside India. If control is there in India, that is taxable even for RBNOR also. But here the control is not inside India. Therefore, it is not taxable for RBNOR. But for ROR, exactly Manikanta, since it is a global income, it is taxable for ROR. And for the other two persons, it is not taxable. So if you add the total incomes, you will be getting the same answers. Okay. Easiest question, guys, is residential status. You should not miss this question. Very, very simple. Just a moment, guys. Nohit, if you don't mind, can you please share all the PDFs which I have shared in the group? That would be very much helpful for me. Can you please do that, Nohit? Okay. Yes, guys. So this is fine for us. And in this residential status, there is only one more topic which is left, and that is nothing but deemed resident. So let's quickly understand that part. And once that was done, residential status point is completed, guys. Okay, sir, what is the deemed resident concept? Just wait, guys. I will explain you everything. Thanks, Nohit. Thank you so much. Deemed resident is given in section 6, subsection 1A. Okay, sir, this provision is not applicable if a person is already a resident under 6 subsection 1. Which means if a person satisfies either B1 or B2, he is normally a resident. This deeming fiction will be applicable only if the person is not satisfied B1 also and not satisfied B2 also. Which means he is not a resident as per basic conditions, but still he can be deemed as a resident if the following additional conditions are satisfied. Which means what? If he is an Indian citizen, if his total income, same point, while calculating total income, don't calculate foreign incomes, but you have to include one special income. If it is more than 15 lakhs, if he is not liable to pay any tax in the country of his residence, then such person shall be treated as RBNOR. Such person will be treated as deemed resident. But without checking any additional conditions itself, that person will be straight away treated as RBNOR. R, which is very, very important. So only 2 points you have to remember, guys. First one, if any person becomes a resident because of modified B2, or if any person becomes a deemed resident, that person will directly become RBNOR. Don't check any additional conditions. Even if both the additional conditions are satisfied, the person will not be treated as, the person will be only treated as RBNOR. These are very, 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 very important. If any person becomes resident only because of modified B2 or deemed resident, the person will be called as RBNOR. So yes, guys, super Nohit, thank you so much. Now a final revision, you have to respond now. First basic condition, how many days the person have to be staying in India? Respond fastly, guys. How many days a person have to stay in India for basic condition 1 to be satisfied? I'm waiting for the answers. Let me check. Super Dhanush. Excellent. For first basic condition, he have to stay for 182 days in India. Super, guys. For second basic condition, how many days he have to stay? Tell me, guys. I am waiting for you. For second basic condition. Thank you, Sujana. It's correct. 182. Deshita, it's 182. Prabhas, 182. Correct. Exactly. Super. Super, Hemachandra. Manasa, it is correct. Telegram link is already shared in the chat box. Please don't reply with that. Super, guys. Second basic condition, 60 days or more during the current previous year. Now, remember. In 2 cases, don't check the second basic condition. Sir, what are those 2 cases? First case, if that person is an Indian citizen who is leaving India for the purpose of employment outside India. Second one, if the person is an Indian citizen or person of Indian origin who is staying outside India but visits India during the previous year and his total income is up to 15 lakhs, then also don't check the second basic condition. But, if such person who is an Indian citizen or a person of Indian origin staying outside India but visits India during the previous year, plus his total income is more than 15 lakh, then you have to check the modified B2. Sir, what is the meaning of this modified B2? Can someone please respond in the chat box, guys? What is the meaning of modified B2? How many days he have to stay in India for this modified B2? Please tell me, guys. Super, guys. Super, Varsha. Thank you so much. Super, Manasa. Soundarya, it's correct. For modified B2, you have to stay in 120 days or more during the current previous year and 365 days or more during last 4 immediate previous years. And it is correct, guys. So next one, A1, additional condition 1. Sir, individual should stay in India for. Individual should be resident in at least 2 out of last 10 years. And second additional condition is individual should stay in India for 730 days or more during the last 7 previous years. And this is the most important point you have to remember, guys. Modified B2 and deemed resident. Then that person will be straight away treated as RBNOR without checking for additional conditions. So without checking for additional conditions, that person will be straight away treated as RBNOR. So with this residential status and scope of total income is completed. So the next question, we have to ideally start with this salaries, but what I am trying to do is I will be starting with this set off or carry forward of losses, which is very interesting and easy, and it will be completed only in the next 15 minutes. It will be completed only in the next 15 minutes. I want your complete focus. I want your complete focus on this set off and carry forward of losses. So I hope this PDF is with you guys. From this, can you please open the set off? Jahnavi, this is already shared in the Telegram group here. So please check in the group. This is in the name of, what should I say? Super 35 concepts. So can you please check this? It is already there. It is already there. Please check this. Okay. So now check this. Nohit, can you please share Telegram group in the chat box? I think they are not getting that. If you do this, that would be very much helpful. Yes, guys. So let's quickly start with this chapter, which is set off and carry forward of losses. So check this. Okay. Okay, just give me a moment, guys. I'll try some other thing. I have entered the full name in the group, guys, in the chat box. So please check this. I think this will help you. Yes, Rahul, I'm not using any Telugu word, so don't worry. You can easily understand. Okay, so now check this. So the next concept which will quickly start is this set off and carry forward of losses. So the first thing, guys, I think you guys have already know that there are totally 5 heads of income, correct? Yes. Out of this 5 heads of income, first let us analyze in what heads losses are possible. Then we can easily complete this point. So first point, in income from salaries, this is not possible. In income from salaries, getting loss is not possible. In income from house property also, getting loss, other than these salaries, in all the 5 heads of income, getting losses are possible. So just 1 minute. Okay. In income from salaries, getting losses is not possible. Whereas from all the other four heads of income, getting losses is definitely possible. So what you have to do? Okay, you just have to remember these points. You just have to remember these points. First, business losses. You have to remember three business losses. First one, speculation business losses. Second one, specified business losses. And third one, normal business losses. First one, specified business losses. Second one, speculative business losses. Third one, other business losses. Simple. Capital losses. We only have two types of capital losses which you have to remember. First one, long-term capital losses. Second one, short-term capital losses. Business losses, only three guys. Speculation, specified, normal. Capital losses, only two. Long-term capital losses, short-term capital losses. So next one. Other losses also you have to remember. Three things, guys. First one, casual losses. Second one, losses from owning and maintaining race horses. And the last one is other losses. And the last one is other losses. It is very simple. Other sources related head also you have to remember 3 points. Sir, business you have to remember 3. Speculation, specified, normal. Capital losses also you have to remember 2 things. Long-term capital losses, short-term capital losses. And other losses you have to remember only 3 things. Casual losses, losses from owning and maintaining race horses, and last one is other losses. Guys, can you please try again now? I think now you can be joining in that group. Okay, so check this. After this, let's quickly learn about this intra-head adjustments. Sir, what is the meaning of this intra-head adjustments? It is very simple, guys. Loss from one source of income can be set off against profit from other source of income if both belongs to same head. Which means, sir, I am having house property loss from one house and I am having house property income from another property. Sir, can I set off this loss from that profit? Answer is yes, you can do that. Loss from one source of income can be set off against profit from other source of income if it belongs to same head. But sir, are there any exceptions? Yes, guys, there are definitely some exceptions. Sir, what are those exceptions? First one is losses from speculative business. Losses from speculative business can only be set off against profits from speculative business. And second one, loss from specified business can only be set off against profits from specified business. Third one, long-term capital losses can only be set off against long-term capital gains. And next one, casual losses cannot be set off against any other incomes. Even casual incomes also it is not set off, guys. Losses from activity of owning and maintaining race horses also only it can be set off against profits from activity of owning and maintaining race horses. And the last one is losses from exempt sources. Guys, simply you have to ignore this. Remember, guys, set off chapter. If you want to get full out of full marks, you only have to remember 6 exceptions in case of intra-head adjustments. First one, loss from speculative business. Second one, loss from specified business. Third one, long-term capital losses. Fourth one, casual losses. Fifth one, losses from activity of owning and maintaining race horses. And the last one is losses from exempt sources. And the last one is losses from exempt sources. So simple, guys. Intra-head adjustments are done. Now let's quickly check this inter-head adjustments. Okay, sir, what is this inter-head adjustments? Simple. If you are having loss from one head of income and if you are having profit from another head of income, those can be set off. But there are some exceptions, guys. But there are some exceptions. Sir, what are those exceptions? If you are having speculative business, if you are having specified business, if you are having long-term capital loss or short-term capital loss, if you are having casual losses, and if you are having losses from activity of owning and maintaining race horses, and losses from exempt sources. Guys, all these are nothing but exceptions which are covered in intra-head adjustments. Even in inter-head adjustments also, same to same 6 points are repeated. But the only thing which you have to understand is business losses can be set off against any other income, which means what? Guys, normal business loss can be set off against speculative income and specified income also. The restriction is only about losses from speculative business and losses from specified business. If the losses are from other businesses, that can be set off against speculative incomes and specified business incomes also. I hope this point is clear, Dhanush. Yes, then give a thumbs up if the point is clear. Okay, super Dhanush. Thank you. No worries. So business loss can be set off against any other income except salaries. Remember guys, PGBP loss can only be set off against any other head except salaries. Except salaries. And next most important thing, house property loss can be set off against any other income but maximum 2 lakh rupees only. And that is also in case of optional tax regime. If you are having house property loss, you can set off against any other head of income but maximum 2 lakh, and that is also only in case of optional tax regime. Okay. Sir, the 6 points are super points. Only you have to remember these 2 points, but most important. First one, business loss can be set off against any other income except salaries, and the next part, house property loss can be set off against any other head of income but maximum 2 lakh rupees in case of optional tax regime. So next one, we have completed guys only these 2 adjustments. If you remember these exceptions, your chapter is completed. First, intra-head adjustments, 6 exceptions. First exception, loss from speculative business. Second exception, loss from specified business. Third exception, long-term capital loss. And fourth exception, casual losses. And fifth exception, losses from owning and maintaining of race horses. And the last exception is losses from exempt sources. And the last one is losses from exempt sources. And after this, we are having inter-head adjustments also guys. And after this, we are having inter-head adjustments also. So here what you have to check guys, loss from one head of income can be set off against other head. But are there any exceptions? Yes guys, we are totally having 8 exceptions. We are totally having how many exceptions? We are totally having 8 exceptions. Here, all these 6 points are same to same. Other than those, you have to only check these 2 points. First one, business loss can be set off against any other head of income except salaries. And house property loss can be set off against any other head of income but maximum 2 lakh rupees. And that is only applicable for optional tax regime. And that is only applicable for optional tax regime. So next part. Order of set off. Guys, we have to first do this intra-head adjustments, and then we have to do this inter-head adjustments, and last you have to do this carry forwarding of adjustments, and then last we have to do that carrying forwarding of adjustments. This is done. Chapter completed guys. Now let's quickly move to questions, but only 2 points. If any losses carry forward once, always remember it can be set off only against incomes from the same head. It can be set off only against incomes from the same head. Okay guys, that is also fine. Which means what? If the loss is carry forward once, for example, assume it is a PGBP loss. In next year, you can set off only against PGBP incomes. You cannot set off against house property. You cannot set off against income from other sources. You cannot set off against capital gains also. You cannot set off against capital gains also. So next part. Sir, is there any time limit for carrying forward of such losses, or for n number of years can I carry forward? Guys, there is some time limit. So let's understand that. For specified business loss, or for specified unabsorbed depreciation, or for unabsorbed scientific research expenditure, or for unabsorbed family planning expenditure, there is no time limit. For these items, there is no time limit. And next one, speculative business and loss from owning and maintaining of race horses. The time limit is only 4 assessment years, guys. The time limit is only 4 assessment years. All other losses, 8 assessment years. But losses from other sources, only this loss can be carried forward. Other than these losses, other losses cannot be carried forward. It is pretty simple. For 2 items, there is no time limit. For another 2 items, there is only 4 assessment years. And for all others, there is totally 8 assessment years. And for all others, there is totally 8 assessment years. So with this, we can sum up this and then we'll start with the problem. So only the important points which I have covered in this, guys. So what we'll be doing now is, we'll be solving one question relating to this super 35 questions from this set of chapter. So let's quickly check that point. 1 second. Set of, okay. So this is the question which I'm going to solve from this. What is this? Set of carry forward of losses. So let's quickly solve this question, guys. So the first one, Mr. Deepak have derived the following income or loss as computed below for the previous year 24-25. So the first one, loss from agricultural business. Guys, this is nothing but loss from exempt source. What you have to do, you have to ignore. Next, loss from let out house property. Loss from let out house property. It is how much, guys? 2,20,000. So it is how much? 2,20,000. Okay. Guys, we already know this. House property loss can be set off against any other head of income, but maximum 2 lakh. But maximum 2 lakh. Sir, but here how much is the loss which I am having? Arey Baba, you are having 2,20,000 as loss, which means 2 lakh can be set off and 20,000 can be carried forward. Income from speculation business. Super. That is how much? 9,72,000. Sir, I am having loss from non-speculation business. 2,50,000. Guys, you have to remember this one point. Losses from non-speculation business can be set off against profits from speculative business. But speculative business losses cannot be set off against other business incomes. But other business losses can be set off against speculative business losses, which means this can be set off against this income. And the next one is income from car races. Guys, this is nothing but casual incomes. This is nothing but casual incomes. And the next one is loss from owning of activity and maintaining race horses. Here we are having 70,000, guys. This can be directly carried forward. This can be directly carried forward because loss from activity of owning and maintaining race horses can only be set off against profits of owning and maintaining of race horses only. If you check the answer, you can easily understood, guys. Out of this 2,20,000, 2 lakh can be set off and this will be directly taxed as gross amount. So no adjustments will be needed for that. Is loss from non-speculation business can be set off against the income from speculative business also. And the next one is, that's it, guys. I think this question will help you right now. So with this, we have completed set of carry forward as well. So let's quickly check whether you have any doubts in this set of carry forward or not. If you are done, Now let us start with next thing. Excellent, Dhanush. Answer is 7,02,000. Super. That is correct. Just give me a moment, guys. I'll get some water and I'll come. Just stay tuned. Don't go away. I'll be joining very soon. Guys, now the group has changed to public. So can you please try it with BCCA hyphen paper 7A hyphen Raviteja, sir? I think now you can get access to this. So please check this. So with this set off is done. And now let us move to no hit. We have three questions. We have three questions from this set off. If you want complete clarity, you can refer to Super 35 questions wherein I have explained completely. But now, since the time is constrained, so I am just explaining only the important areas only. So I think you have understood this. So yes. So now let us quickly check with income from salaries. Okay. So now let's quickly check with income from salaries. Very easy question. Easy. So come on. Salary. This entire PDF is already available in the Telegram channel. So don't worry, guys. You just listen to this and then we'll solve one or two problems also to give you enough confidence. So first one, basic salary. First one, basic salary. Always remember, guys, basic salary, if it is given in the question, it is fully taxable in the hands of employee. So next one, dearness allowance. What is this, sir? Dearness allowance. Dearness allowance is extra amount paid by the employer in order to meet the inflation. Sometimes they will give DA in terms and sometimes they will give DA not in terms. But always remember, guys, whether they have given DA in terms or whether they have given DA not in terms, both DAs will be taxable. Both DAs will be fully taxable. And the next part, fee. Fee is nothing but extra remuneration for doing a specific job. That is also fully taxable. Next one, commission is always fully taxable. And the last one is bonus. That is also fully taxable. And last one is bonus, that is also fully taxable. So you have to check these points, guys. Basic salary fully taxable always. Dearness allowance is also fully taxable always. Commission is also fully taxable. P is also fully taxable. And last one, bonus is also always fully taxable. Bonus is also always fully taxable. Now what I want to focus is this is the most important thing which you have to focus. Sir, what is this point, sir? Meaning of salary in different cases. Meaning of salary in different cases. Always remember, guys, the normal definition of salary, because in many cases I will be explaining all the important cases right now. In gratuity, you will see one point wherein they will explain salary. In another point, they will say about leave encashment. There also we have different definition of salary. In another case, they will say about rent-free accommodation. There also we are having different definition. And next one is house rent allowance also we are having, and they will say some different definition of salaries. Sir, how to remember all these things? Don't worry, I have provided you the thing. First one, generally salary equals to basic plus DA in terms plus commission as a percentage of turnover. This is the normal definition which you have to always remember. Salary means basic plus DA in terms plus commission as a percentage of turnover. Okay, sir, I understood what you are trying to say. But there are some exceptions which you have to remember. How many exceptions I have to remember, sir? First one, second one, third one, fourth one. In these four exceptions, we are having different definition of salary. Other than these four exceptions, wherever you heard the word salary, you can take this basic plus DA in terms plus commission as a percentage of turnover. Sir, what is the first exception, sir? While discussing gratuity, I will explain this point. If the employee is covered under Gratuity Act, for him salary equals to basic plus DA. For him salary equals to basic plus DA. And next one, guys. Pooja, don't worry. Set off carry forward. Default tax regime I will explain while explaining 5B questions. There is only one point which you have to remember, and I will explain while explaining that 5B question. Please now focus on this salaries only. Rent-free accommodation case also we are having salary definition as too bad CM. Rent-free accommodation we have salary definition as too bad CM. And in case of entertainment allowance, salary equals to only basic. Once again, I'm revising, guys. This is very important. So you have to keep your complete focus on this. Normally, the definition of the salary is basic plus DA in terms plus commission as a percentage of turnover. But four exceptions you have to remember. They are saying some different definitions for these four exceptions. The first exception is gratuity. If the employee is covered in Gratuity Act, there the definition of the salary is basic plus DA. Whether in terms or not in terms, you have to take fully. Retrenchment compensation also same definition. Rent-free accommodation, this is the most important definition. So here we have to take too bad CM. Sir, what is this? First one is for basic. Second B is for bonus. Next A is for allowances you have to take. Sir, allowances means what I have to take, sir? You have to take only the taxable value. Next, D for DA in terms you have to take, and C for commission you have to take. Arey Baba, all commissions you have to take. Remember this point, very, very important. And M for monetary payments, example, fees, etc. If it is in terms, then you have to add psi. If it is not in terms, you will not add. If the DA is in terms or not in terms, both will be added if the employee is covered under Gratuity Act. Very, 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 very simple. Four exceptions. First one, if the employee is covered in Gratuity Act. There the definition of salary is basic plus DA. Second one, retrenchment compensation. There also the definition is basic plus DA. Third one, rent-free accommodation. There the definition is 2 bad CM. Sir, what is the meaning of 2 bad CM? Basic, bonus, A for allowances. Sir, what I have to take? Taxable value of allowances. D for DA in terms. C for commission, and M for monetary payments made by the employer. And the last exception, guys, entertainment allowance. Here what you have to remember? Here you have to remember salary equals to basic. So with this, let us quickly move to gratuity part. No, HRA let us discuss first. Always remember, HRA exemption would be applicable only when the SSE is shifting out of default tax regime, which means what? This is applicable only if the person is staying in optional tax regime. This is applicable only if the person is staying in optional tax regime. Sir, this is the most important, guys. What is the exemption of HRA? Actual HRA received or 40% or 50% of salary or rent paid minus 10% of salary. Simple. Actual HRA received or 40% or 50% of salary or rent paid minus 10% of salary. Sir, what is the meaning of salary? Is it covered in exception? No. Therefore, the definition of salary is basic plus DA in terms plus commission as a percentage of turnover. Basic plus DA in terms plus commission as a percentage of turnover. And you students will be having one doubt. Sir, when this 40% would be applicable and when this 50% would be applicable? Guys, 40% is applicable for non-metro cities and 50% is applicable for metro cities. Sir, what is the meaning of metro cities? Don't confuse like this. The cities where metro facility is available, those are not metro cities. Only 4 metro cities we are having: Delhi, Mumbai, Kolkata, Chennai. Delhi, Mumbai, Kolkata, Chennai. Which means, sir, is Hyderabad not a metro city? No. But still, Hyderabad is having metro facility. But it is not metro city as per this section. Bangalore is also not covered here. So it is very simple. Actual HRA received or 40% or 50% of salary or rent paid minus 10% of salary, whichever is lower will be your exemption. Whichever is lower will be your exemption. Next, let's quickly check this pension part. 2 types of pension are there. First one, commuted pension, and second one, uncommuted pension. Guys, always remember, uncommuted pension will be fully taxable for all the persons, but commuted pension, if it is received by government employees, then it is fully exempted. If commuted pension is received by government employees, then it is fully exempted. But if it is received by other employees, you have to check, sir, whether the person have already received gratuity or not. You have to check. If the person has already received the gratuity, for him we will be giving lesser exemption. If the person is not received gratuity, for him we will be giving more exemption. If a person have received gratuity, will be giving only 1/3 of full value of pension would be exempted. But if they do not receive the gratuity, 1/2 of full value of pension would be exempted. Sir, what is the meaning of full value of pension? Simple, guys. Commuted pension divided by commutation percentage. While solving the questions, you will understand what I am trying to explain. Simple. Quickly revise pension. 2 types of pension: commuted pension, uncommuted pension. Uncommuted pension is fully taxable for all. Commuted pension is taxable only for non-government employees. If the employee is covered in gratuity, if the employee is received the gratuity, not covered, guys. If the employee has received the gratuity, 1/3 of full value of pension would be exempted. Sir, the person is not giving the gratuity, not receiving the gratuity, 1/2 of full value of pension would be exempted. Dhanush, in terms means if that dearness allowance is included in the retirement benefit, that is called as in terms. If that in terms is not related to retirement benefits. That is called as not in terms. In exam, they will specifically say in the question whether it is in terms or not in terms. Sir, what we have to do if nothing is given in the question? Then we can assume the question DA is in terms and solve the question accordingly. Easy point, guys. The next one. I hope, Dhanush, you have understood this. Please give me a heads up if you understood this. Now let's quickly move to commuted means transferred, guys. Uncommuted pension means monthly pension. Commuted pension means you have foregone the future value of pension which you don't want to receive. Simple. For example, uncommuted pension means monthly pension. Commuted pension means every month you are receiving 1 lakh rupees as a pension. That 1 lakh will be called as uncommuted pension. Now you are saying, sir, I want to construct one house. So why are you giving monthly pension? I don't want that monthly pension. Can you please give me one lump sum pension? Lump sum pension is called as commuted pension. Then the person will say, okay, from now onwards, I will not be giving you 1 lakh per month. I will only give you 20,000 per month. Sir, what about 80,000? I will convert that future amount into present amount and they will give you lump sum amount now only. And that is the meaning of commuted pension. Okay. Commuted pension means lump sum amount and uncommuted pension means monthly pension. So this is pretty clear, guys. Easy point. So next, let's quickly move to gratuity point. Sir, gratuity, if it is received during the service, fully taxable. If it is received on or after the retirement or termination of the service, Are Baba, if you are a government employee, fully exempted. If you are other employees, you have to check two things. If you are covered under Gratuity Act or if you are not covered under Gratuity Act, sir, what is the amount which I have to check? Uncommuted, both can be after retirement only, Karan, but uncommuted means monthly pension or periodical pension. Commuted means lump sum amount. Okay, that's it. So now, if the employee is not covered under the Gratuity Act, exemption amount is actual gratuity received or 20 lakh rupees or 1/2 of average salary of last 10 months preceding the month of retirement multiplied by number of completed years of service, and whichever is lower will be your exemption amount for gratuity. Most of the students are having a confusion. Sir, whether to take 25 lakh or 20 lakh? No, you have to take 20 lakh only. As per law, that is amended. But as per income tax, the limit is still 20 lakh only. So don't get confused. If the person is covered under the Payment of Gratuity Act, 20 lakh or actual gratuity received or 15/26 multiplied by last drawn salary multiplied by number of completed years of service or part in excess of 6 months. Here also they have used the word salary. Sir, here the employee is covered under Gratuity Act, which means it is an exception one, and therefore here the salary definition is basic plus DA. Here the salary definition is what, guys? Basic plus DA. But here the salary definition is basic plus DA in terms plus commission as a percentage of turnover. This is pretty simple. I hope you have understood this point, guys. So leave salary encashment, I am not explaining now. If you have any doubts, you can easily refer this in the Super 35 questions wherein I have explained clear-cutly about this leave encashment. So now I am not touching this. Provident fund also I have explained, but what you have to remember is if they have given employer contribution to RPF exceeding 12% of salary is taxable. Sir, what is the meaning of salary here? Only one thing you have to check. Sir, is it covered in exception? No. What are the exceptions? 4 exceptions. First one, covered under gratuity. Second exception, retrenchment compensation. Third exception, rent-free accommodation. Fourth exception, entertainment allowance. Now it is not covered in this. So This in excess of 12% of salary would be taxable. And what is the meaning of salaries? Basic plus DA in terms plus commission as a percentage of turnover. This point also, guys, the person is covered under Gratuity Act, then even if it is more than 6 months, you have to take as full year. But if he is not covered under Gratuity Act, then only you have to take completed years of service. Guys, this point also I have in-depth explained in Super 35 questions. So if you have any doubt, you can easily refer that. Since there is time constraint, I am just quickly checking the important points only. Interest on employer or employee contribution in excess of 9.5% per annum would be taxable. Interest in excess of 9.5% per annum would be taxable. Other points are exempted. Other points are exempted. So Dhanush, don't worry about that in terms meaning. It is not at all relevant for your exam. But since if you want clarity, let us take this point later. But now, whatever is relevant for the exam, let's only focus on that point. If you have any doubts, Dhanush, I will definitely explain this. Don't worry about that. Okay. So next part. This is also done. These you have to check some very important fully exempt perquisites. So the first, if telephone or mobile bill or mobile phone is provided by employer to employee, that is exempted in the hands of employee. And next part, scholarship is given to children of employee, that is also exempted. Third point, goods sold by employer to employee at concessional rate, that is also exempted in the hands of employee. So you just have to remember these points. Very important. Next part, this is the super important point according to me. So next, personal accidental insurance policy, medical insurance premium paid by the employer to employee are fully exempted, but this you have to remember. Life insurance premium paid by the employer is fully taxable. And next one, conveyance facility provided by employer to employee is also fully taxable, fully exempted. Non-monetary perquisites also, if any tax is paid by the employer, that is also fully exempted. These 6, please go through these points, guys. You have to remember this, very important. After this, this is the super important, which is rent-free accommodation. If it is unfurnished accommodation and if it is provided to government employee, the taxable value is license fee fixed by the government. If it is provided to other employee, if employer is the owner, then the definition is, then the taxable value is 5%, 7.5% or 10% of the salary. And if it is hired by the employer, then it is rent paid or 10% of salary, whichever is lower. And after that, when the 5%, 7.5% or 10% is applicable, I have clearly given it in the down. So don't worry. Hotel accommodation also, what is taxable means hotel charges paid or 24% of salary, whichever is lower would be taxable. Sir, what is the definition of salary? 2 bad CM. Just now we have discussed 2 bad CM means basic, bonus, allowances, taxable value you have to take, DA, in terms you have to take, commission you have to take, all types of monetary payments also you have to take. Next one. This is the most important. If employee have been provided with furnished accommodation, you have to compute the unfurnished accommodation value above, plus you have to add the value of furniture. If it is owned by the employer, then 10% of actual cost per annum you have to add. If it is hired by the employer, then higher charges paid or payable you have to add. Then you will be easily getting value of furnished accommodation. Guys, this is the most important point. If you want to complete clarity regarding this, I have already explained in the Super 35 questions, so you can easily refer that point. But what is the point is, if employer have provided 2 rent-free accommodations up to a period of 90 days, house with the lowest perquisite value would be taxable, which means what you have to calculate this perquisite value for the 2 houses and which house is having lowest value, that will be only taxable for the 90 days. What about more than 90 days? Then both the houses will be taxable. Most important point. But right now, because of the time constraint, I would not be going deep into this. Rent-free accommodation, don't miss this, guys. Definitely go this in depth. After this, medical facility provided by employer to employee or his family. Always remember, if employer is providing medical facility to employee in any hospital maintained by the employer, which means what? Employer itself is the owner of the hospital, or in any government hospital, or for the treatment of specified diseases also, they are fully exempted. Always remember, if the hospital is specially maintained by the employer, that is exempted always. If provided outside India, you please go through this. Travel expense also you can go through. This is the most important. Reimbursement of the medical expenses incurred by the employee from employer in respect of any hospital other than above, that is fully taxable. Which means what? In any private hospitals, if the treatment have been taken, or if any medical expenses are first incurred by the employee and later given by the employer, all those things are not exempted. They are fully taxable. Medical allowances, I will come to allowances part a bit later, but don't worry, everything will be easily summarized. Fully taxable. This is the most important. Movable assets, you have to check if any asset is given by the employer to the employee for use. If it is a laptop or a computer, then it is not at all taxable. Then the taxable value will be nil. Other assets also you have to check. If the employer is the owner of the asset, 10% of actual cost. And if it is hired by the employer, then hire charges paid by the employer. This is the most important point according to me, which you should not miss. Laptop or computer, nil. Others, if employer is the owner, 10% of the value. Otherwise, higher charges paid. This you can just go through. These are not that much important, so you can just go through this. Next one. These are the most important. Deductions under section 16. Most important. 3 deductions are there, guys. You have to remember. First deduction is standard deduction. Second deduction is entertainment allowance. Third deduction is professional tax. Easy points. Standard deduction. 2 you have to remember. If the person is following optional tax regime, he is having different standard deduction. If the person is following default tax regime, he is having different standard deduction. If the person is following optional tax regime, 50,000 or gross salary, whichever is lower, will be the standard deduction. If the person is following default tax regime, 75,000 or salary would be the, whichever is lower would be the standard deduction. Easy points. Default 75, default 75, default 75, optional 50, optional 50, optional 50. Entertainment allowance. Always remember, this is fully taxable for all the employees, but deduction will be allowed only for government employees. Sir, what is the deduction of entertainment allowance? Actual 5,000, 20% of salary. This is not that much important. You can skip this. But this is, you have to understand, it is fully taxable for all employees. In major cases, they will not give government employees. So this, even if you forget, that is still fine, but you have to first tax it for all the employees. Next. Professional tax. If it is paid by the employee, deduction would be allowed. If it is paid by the employer, first it is taxable as a perquisite, and then deduction is allowed, and then deduction is allowed, and then deduction is allowed. So this also done. This is the most important. I think Dhanush have asked this point. Dhanush, you will understand now. If an employee decides to stay in default tax regime, you have to remember the following points, guys. Standard deduction of 75,000 would be available. Whatever the exemptions which I am saying now, those are not at all applicable. First one, HRA, leave travel concession, free meals exemption. This you have to remember. This is the most important. This is only allowed for optional tax. These also only applicable for optional tax regimes only, which are very important. So after this, let's quickly move to allowances part. Guys, allowances, just listen, very simple. 2 types of allowance, 3 types of allowances you have to remember. First, let us learn about optional tax regime. How many allowances we have to remember, sir? 3 allowances. First, fully taxable allowances. Partly exempt allowances. Third one, fully exempt allowances. Sir, do we have to remember all these three? Answer is no. You just have to remember only these two. And whatever the balancing figure which is there, all those are fully exempt allowances. All those are fully exempt allowances. These just go through High Court or Supreme Court judges, sumptuary allowance granted to High Court or Supreme Court judges. These two are fully exempt. Partly exempt allowances, only two you have to remember. First one, house rent allowance, and second one, special allowances under section 10 clause 14. Sir, do we have to remember all these things? Yes, guys, but I have framed one beautiful story. One beautiful story I have framed. If you just go through the story, this is there in the BCCA channel only, guys, wherein I have explained one story. If you just read that, you will easily remember all these allowances. But out of this also, I will be saying some points. Someone is saying love from Afghanistan. Wow, I really love Afghanistan and Afghan peoples. So thank you, Sham, for love from Afghanistan. We are also showing too much of love from BCCA. So thank you. Love from Mars. Excellent. Wow, 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 wow. Everyone. Super. So next. Out of this also, I will be giving some important exemptions. Important exemptions which you have to remember. So please check this, guys. This too you have to remember definitely. Children education allowance 100 per month and maximum 2 child is exempted. 100 per month and maximum 2 child is exempted. Hostel allowance 300 per month and maximum 2 child is exempted. 300 per month and maximum 2 child is exempted. So next one. These super important. Daily allowance, traveling allowance, conveyance allowance. These are exempted. What is exemption? Actual allowance, actual expenditure would be exempted. Next one. Transport allowance. Sir, here what is exempted? Maximum 3,200 per month is exempted. But this exemption is only applicable for blind, deaf and dumb or physically handicapped. Dhanush, Tirupati. I love Tirupati. I love Balaji. I love Tirupati. So we'll definitely meet once I reach Tirupati. We'll have some good time there. So, okay. So all these points are done. But the most important point is, now I will explain. Please focus on this. Sir, okay, we have learned all these points and these are partly exempted, and whatever the things which are not partly exempt and not fully exempt, those are fully taxable. For example, entertainment allowance. This is not covered here. This is not covered here. So it is fully taxable. Tiffin allowance, not covered here, not covered here. So it is fully taxable. Arey Baba, last one, medical allowance, not covered, not covered. So fully taxable. Next, gift allowance, not covered, not covered, fully taxable. So like this, you have to analyze. If it is not fully exempted, if it is not partly exempted, then it is fully taxable. These are all applicable for optional tax regime. But now focus on default tax regime, which is even more simpler. Super, Dhanush, definitely will make. Sunny, love from Kerala. Super. I too love Kerala as well. I will definitely plan to visit this summer. So we'll definitely plan a meetup there. We'll have some good time. Okay. So now, in case of default tax regime, remember guys, whatever the fully exempt allowances which you have studied there, all those are fully taxable. Whatever the fully taxable allowances you have studied there, they are also fully taxable. And whatever the partly exempted allowances which you have studied, they are also fully taxable, but except DTC. Sir, what is this DTC? Daily allowance, traveling allowance, transport allowance or conveyance allowance. Okay, so check this. Only these three allowances are applicable for default tax regime. Other than this, all exemptions will never be applicable in case of default tax regime. Only three allowances: daily allowance, traveling or transport or conveyance allowance. Arey, this transport allowance is also not applicable for all. Only applicable for Blind, deaf and dumb or physically handicapped. Guys, not only this, because of the interest of time, I'm not explaining. The valuation of the car perquisite is most important, so you should not miss. Next, after this car, there is something called as gift perquisite, which you should not ignore. And after that gift, we have something called as interest-free loan. Guys, this will not take more than 5 to 10 minutes. If you have any doubt, please refer Super 35, wherein I have clearly explained all the relevant topics along with the questions. So you can easily check this. So with this, we have completed the salaries chapter. So now let's quickly check the questions. So let's solve some important questions from this salary so that you will be confident in what I'm trying to say. This question is important, I guess. So, okay, we'll solve this. This is good question. Okay. So first one. Okay, this is also not that much important. I think this is fine. Question number 9. Mrs. Simran. Oh, someone is saying Mahesh Babu brother la unna. Okay, thank you so much. Thank you. I'm a huge fan of Mahesh Babu as well. Okay, thank you. Thank you, Sham. So next. Basic salary is 70,000 per month up to 31st July 2024 and 75,000 per month from 1st August 2024. Can you calculate the full salary? 70,000 up to 31st July and 75,000 from 1st August to last 31st March 2025, which means April, May, June, July, 4 months, 70,000, and for 8 months, 75,000. Have they calculated like this? Yes, they have calculated like this. So super. Next part. Dearness allowance, 25% of basic salary, but they are clearly saying it is not forming part of retirement benefits. Okay, but whether it is forming part of retirement benefits or not forming part of retirement benefits, Are Baba, both DAs will be included. Both DAs will be included. So super. Fine. Which means what? 25% of basic salary, which means 8,80,000 is fully taxable. Fully taxable. Easy point. So next. Bonus equal to 1 month salary is paid on basic plus DA applicable for that month. That is also fully taxable, because we have starting only learned that. Bonus is also fully taxable. Hi Meena. Hi Sham. First let us focus on DT. Then let us focus on MB. MB means Mahesh Babu, by the way. So those who don't know, I'm just saying them. Are Sham and Meena, first let us focus on this DD. Then we'll move to Mahesh Babu and Pawan Kalyan or whatever it is. Okay? Understood? If you understood, please give me a thumbs up. I'm waiting for that. So next, bonus is also fully taxable. Next part. This is the most important. Contribution of employer to recognized provident fund on account of the employee. How much they have contributed? 15%. Guys, this is RPF. So just now I have explained, in excess of 12% of salary would be taxable. Oh, but they have contributed how much? 15% of basic salary. But we know that in excess of 12% is only taxable. Sir, that 12% also, whether you have to calculate only on basic? No. 12% of salary means what? Basic plus DA in terms plus commission as a percentage of turnover. But in the question they have given this DA, but this is not forming part of retirement benefits, so it will not be included here. But the question also they have not given any commission, which means the basic is still the salary as per PF definition as well, which means 3% is taxable. Exempt up to 12%. So how much is taxable, Baba? 26,400. Sir, how much they have contributed? 1,32,000. But how much is exempted? 1,05,600. So now how much it is? 26,400 is nothing but taxable. Super. Motor car. owned by the employer, it is exceeding 1.6 liters. Guys, please definitely read this. Motor car. I am not saying you to ignore this. Definitely they will give one question from this motor car. So please check this. Both official and personal purposes, repair and running expenses have been incurred were fully met by the employer. Guys, this is a big car, but this is fully met by the employer, which means 2,400 per month would be taxable. 2,400 per month would be taxable. Super. Next part. Hostel allowance. Huh? Hostel allowance. Are you hearing this? Yes. 300 per month. But this is also maximum. 2 children. Sir, how much they have paid? 10,000. But 300 per month, which means 300 into 12. Into 2 childs. 7,200 is exempted, which means 2,800 is only taxable. Ashwant, can you please elaborate your question? I am not getting. Where am I? This one. 48,000 paid as education facility for 2 children in a school maintained by the employer. 2 children in a school maintained by the employer. Guys, education facility, you have to check one thing. If the value of the education provided is up to 1,000 rupees per month, then it is fully exempted. Otherwise, it is fully taxable. Otherwise, it is fully taxable. Arey Nohit, maybe that Afghanistan student belongs to our Telugu state only. Maybe he settled in Afghanistan. Like that also you can think now. Don't be always negative. Yes. Sunny, you have talked very maturely. You have to do all these fan wars in Twitter only, not here. Correct? Yes. So this is done. And now the last point is they are asking you to calculate the income under the head salaries. Not just gross salary. They are asking you to calculate income under the head salaries, which means you have to do gross salary minus deductions under section 16 minus what you have to do, deductions under section 16. The first standard deduction is 50,000, sir. Why? Because shifting out of the default, which means they are opting for optional tax regime. Therefore, it is 50,000 and hence the income, taxable salary is how much? 12,21,900. 12,21,900. But my quick suggestion is, guys, don't ignore perquisites. Okay, let me do one thing. Now only I will be explaining, because I know it is very difficult for you to later study that part. So no worries, guys. I have totally understood you. I will explain now only all other important perquisites also. So quickly, let me just open that. Out of this perquisites, what you have to do? RFA we are done. Domestic servant done. Gas, water, electricity done. Education facility done. Medical facility done. This is the most important, guys. Check this. I will only explain important points. Please refer that. Guys, this PDF also, if possible, I can share. Otherwise, you can just make a note out of it. If the motor car is owned by the employer, which means owner of the car is the employer. Owner of the car is the employer. Owner of the car is the employer. Fully personal purpose, fully taxable. Fully personal purpose, fully taxable. But they will not give this point. If it is fully used for official purpose, then it is exempted. Employer has given you car. Now you are using that for fully official purpose, exempted. You are using for fully personal purpose, fully taxable. They will not give you both. They will give this point only. Partly for official and partly for personal purpose. If your car is a bigger car means more than 1600 cc. If your car is a smaller car, up to 1600 cc. If your car is a smaller car, then the taxable value is 1800 per month. If the car is a bigger car, 2,400 per month is the taxable value. Here what they are saying, if the maintenance and petrol expenses, running expenses are met by the employer only, then this is the tax statement. If they are met by the employee, then actual expense minus 600 plus 900, 900 per month. See, 1800, 2,400, 600, 900, easy points. If driver is provided separately, Please add extra 900 rupees. Please add extra 900 rupees. Super, 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 super. Hi Kushbu. Hi, hi. Thank you so much. Oh, another person came from Bangladesh. Hi Kushbu. Hi Bangladesh. Everyone, hi. So this is done, I guess. So with this, we have completed with income from salaries as well, which means if you check once, we have already 21 marks in our pocket. Pocket. Residential status done. Salaries done. Set of carry forward done. Now we'll quickly check this default versus optional tax regime also. But before that, let me start with this income from other sources, because this is also very chotu sa head of income. So which will be completed very quickly. Guys, is my voice clear? Someone is saying that my voice is muted. Can you please check me and confirm, guys? Oh, Xavier, you are here also. Excellent. Hi, Xavier. I like your profile picture, by the way. So now let's start with this income from other sources. Super easy chapter. I'll take only 20 minutes. Then we'll start with one question. That's it. Done. We'll be done. Don't worry. Voice clear. Super Xavier. I like your confirmation. Thanks, Danush. Thanks for confirming. Thank you, Karunakar. Now we'll quickly move to this income from other sources. This is the most important things, guys. So I want next 20 minutes your complete attention. 5B I will start, Danush. Don't worry. After this other sources, next question I will be starting is with 5B only. Don't worry. Okay. So now check this. 1 second. Guys, have you opened this? Are you able to open this PDF? Please respond. Please give me a heads up if you are able to open this. Please open. This is there in page 14, I guess. Please open. Super 50 concepts PDF. PGBP and capital gains will try to cover, guys. Don't worry. First, let us focus on important areas. I will definitely explain that PGBP. Don't worry. Okay. Okay, so now let us continue this. Super. Income from other sources. The most important thing which we'll first start with is this gifts. The most important, guys. Okay, no problem, Deepika. I will explain. Tax rates also I will explain. Don't worry. While starting default versus optional, that is 5B question, I will explain that. This income from other sources is very, very important. Easy 7 marks in your pocket, guys. Don't worry. So come on. Alright. Someone is coming in the channel right now and she is asking for PDF. This is not correct. You have to attend the live session from the starting itself. This is already shared in the Telegram group. Please check there. So now, cash gifts. 3 types of gifts you have to remember. First one, cash gift. Second one, movable property. Third one, immovable property. First one, cash, movable, immovable. Okay. So cash gift, if the aggregate value is in excess of 50,000, then fully taxable. Aggregate value in excess of 50,000, fully taxable. Second part, movable properties. Two types you have to remember, guys. First one, without any consideration. Second one, inadequate consideration. Sir, without any consideration means freely they have given. Inadequate consideration means they have given, but the value is 1 lakh rupees, but they have given only 40,000 rupees. The difference is there. The difference is there. Here the difference is 60,000 rupees. So check this. If it is received without any consideration, it is fully taxable. If it is received for inadequate consideration, only difference amount is taxable. If that difference is in excess of 50,000. Baba, if the difference is less than 50,000, not taxable. If the difference is in excess of 50,000, difference is taxable. Difference is taxable. Super. Sir, what is the meaning of mobile property? Simple, Baba. Jewelry, drawings, paintings, sculptures, archaeological collections, any other work of art. 6 items. Same to same definition as given in personal movable property. Jewelry, drawings, paintings, sculptures, archaeological collections, any other work of art or shares or bullion. Listen, most important point now I am saying. Here, car is not covered. iPhone is not covered. Mobile is not covered. Watch is not covered. So all these things are not at all taxable. All these things are not at all taxable. Remember, remember, remember. Whatever the movable property which they have given here, only that is taxable. Are Nohit, some kind of fighting is happening in the group. You are disturbing Nohit. You should not do this. Please focus. So last one. Immovable property. 2 points you have to remember. If you have received without any consideration, which means freely you have received. For inadequate consideration. So check this. First one. Okay, Karunakar, I am smiling for you. So next, if the stamp duty value per property is more than 50,000 rupees, fully taxable. If the stamp duty value per property is more than 50,000, then it is fully taxable. If it is inadequate consideration, you have to check 2 things, guys. Stamp duty value more than 110% of actual consideration and difference is more than 50,000. So then what is taxable? Difference is taxable. Then what is taxable? Difference is taxable. Super. Without any consideration, stamp duty value more than 50,000 is fully taxable. Inadequate consideration more than 110% and SDV minus consideration is more than 50,000. Then what is taxable? Difference is taxable. These points you please check through these things, guys. But the most important points, these you have to remember. Sir, what are these points? There are some exempt gifts which you have to remember. Okay. What are those exempt gifts? Easy. If you have received from your relative, exempted. Marriage, if you have received on account of your marriage, exempted. If you have received because of will or inheritance, exempted. In contemplation of death, exempted. From local authority, exempted. Individual for any expenses for the treatment of COVID, exempted. From or by any foundation, education institution or hospital, exempted. From or by any trust, exempted. Any trust created solely for the purpose of relative of the individual, exempted. Sir, do we have to remember all these things? Those are very much confusing. Don't worry, I have designed one shortcut. If you just check this part, you can easily remember this. Sir, what is the shortcut? The shortcut is Lahari without a cute MD. The shortcut is Lahari without a cute MD. Sir, what is this and how it is linked to this? Simple. LA is for local authority, H for hospital, R for relative, I for inheritance, C for COVID, U for university, T for trust, E for educational institution, M for marriage, and D for death of the payer, and last D for death of the payer. So simple. LA local authority, H hospital, R relative, I inheritance, C COVID, U university, T trust, E educational institution, and M for marriage, and D for in contemplation of the death of the payer. D for in contemplation of death of the payer. Are Surya, here N is not there, L is only there, but you are saying some. Now I am coming to most important definition, guys. Relative definition. What is this? Relative definition. Are Prem, you are completely misutilizing this group. I will kick you from the group. Mohit, you are only responsible for entire things. I will kick you also from the group. Careful. So check this. Individual, individual, individual. The most important is relative definition. Sir, who are considered as definition? I mean relative for individual. His spouse is considered as relative. Brother or sister of the individual are relatives. Brother or sister of spouse of the individual, relative. Individual, brother or sister. Spouse, spouse, brother or sister. Individual parents, spouse parents. Individual parents, brother or sister. Individual spouses, brother or sister. Individual spouses, parents, brother or sisters. They are also relatives. And your children also relatives. And not only these guys, grandparents also relatives. Great grandparents are also considered as relatives. Not only these, spouses of all the above are also treated as relatives. So the next important thing, interest on compensation or enhanced compensation. This is taxable under the head income from other sources in the year in which such interest is received. But most important, 50% of such interest shall be allowed as deduction. Sir, what is the meaning of this? If you receive 10 lakh rupees, 50% means how much? 5 lakh rupees will be allowed as deduction, which means how much is taxable? 5 lakh is only taxable. Correct, Surya. Whatever you have said, it is correct. If gift received on Nohit marriage, that is not taxable under income from other sources. But gift received on Nohit's marriage anniversary, that is taxable as income from other sources. Some I am coming, Ashwan, just wait. Family pension, most important, taxable under income from other sources, but remember, a deduction is there. 1/3 of family pension received or 15,000 in case of optional tax regime or 25,000 in case of default tax regime, whichever is lower would be allowed as deduction. The most important, casual incomes, taxable at flat 30%. Okay, done. The most important dividend point you have to check. Even in this dividend also, super most important is this. Deemed dividend, last point. Sir, what is this? Focus. In case of a private limited company, if any loan or advance is given to its shareholder who is holding more than or equal to 10% of voting power, that is treated as deemed dividend in the hands of Mr. A. Private limited company has given loan to any partner of a partnership firm or any member of any entity, but that partner is having more than or equal to 20% of share of profit, or the company is giving loan or advance to any other person on behalf of shareholder who is holding more than 10% of voting power. Guys, in this partnership firm or company, the person should hold 20% or more of the voting power. He have to be the interest from savings bank account. How much is taxable? Okay, I will explain that point. Don't worry. Interest from savings bank account, if you receive, you will get a deduction under section 80 TTA if you are a normal citizen, and you will be getting deduction under section 80 TTB if you are a senior citizen. I will come to that a little bit later. Don't worry. This is the most important, very important. In the exam, they will be definitely testing this point. Sometimes they will give income received, sometimes they will give income earned. Sir, what is the difference? Income received means after TDS, income given means before TDS. Sir, what is taxable? Before or after? Before is only taxable. If they have directly given income received in the question, you have to convert that into income earned. Sir, how can I do that? Simple. Income received means after TDS. They will give only for these two incomes. First one, lottery income received. If 70% is received, TDS is 30%. Now you have to convert that into 100%. Sir, how can I do that? Arey Baba, whatever received amount which you have given by 70%, you please do that. Example, they have given lottery income received 70,000 rupees. Now this is equal to 70%. Sir, 70% it is 70,000. For 100%, how much it is? 1 lakh. Not you, Nohit Sai. The cunning fellow is Nohit Kadari only. I am talking only about him. Okay, don't worry. Nohit Sai is a good boy. Okay. So next. So all these points are done. This is the most important deduction for expenses against dividend income. Only interest expense is allowed as deduction. That is also maximum 20% of dividend income only will be allowed as deduction. Which means what? For example, let me assume they have given 1 lakh rupees as dividend income and they have given interest. Assume they have paid 50,000, but how much is allowed? Only 20% is allowed, which means only 20,000 will be allowed as deduction and the balance amount is 80,000 will be taxable. How much will be taxable? 80,000 would be taxable. Now let us quickly check the other sources questions. Only one question I am going to explain. So come on guys, this question. Okay. So amount received from evaluation of answer books of a professional examination, 70,000 rupees. Expenses incurred for earning this expense is 1,200 rupees. So 70,000 minus 1,200. Balance amount is taxable, which means 68,800 is taxable. So the next part, income tax refund they have given and including interest amounting to they have given. Guys, remember, income tax refund is not taxable, but interest on income tax refund is taxable under income from other sources. Okay. Income tax refund is not taxable, but interest on income tax refund is taxable under income from other sources. Cash gift received from his friend on his marriage anniversary. Arey Baba, any gift received on your marriage is exempted, but marriage anniversary taxable fully. Gift received from his son, Mr. Abhijit. Arey Baba, son is also his relative. Therefore, it is exempted. Amount received from letting out of residential house property. 50,000 per month. Guys, I think you have already know this point. If any income is received from letting out of residential house property, that is not taxable under income from other sources. That is taxable under income from house property. But here the question is asking you to calculate income chargeable under the head IFOS, which means it is clearly not the case. So fine, this is taxable under income from income from house property. Dividend received from Indian listed companies, 65,000. Interest expenses on loan taken to buy the shares, 15,000. Arey Baba, into 20% is only allowed as deduction. Which means 65,000 into 20%, it is only 13,000 will be allowed as deduction. 13,000 will be allowed as deduction. So if you check this, balance amount would be taxable. So the question is pretty simple. So after this, we are done. And now let us check how many marks are there in our pocket. Set off done. Other sources done. Salaries done. Residential status done. So this 2A, 2B completely done. 3A, 3B will come to this. 4A, 4B, other sources done. So now let us quickly move to this default versus optional tax regime. Now let's quickly move to this default versus optional tax regime. Guys, this is super most important. So now let us check this part. Hmm. Most of the students are worried about this tax rates. So now let's quickly open this tax rates and we'll explain you all the relevant things which you have to remember while solving default versus optional tax regime questions. Okay, so please check this. Most important. Danush, I totally understand you. So please place 100% of your focus on this because definite 7 marks are coming from this question, which is the super important concept. Okay, so I'll be just giving you 1 minute break. Don't go anywhere. Just sit and just relax because this is the most important thing. So this is the most important. So you have to sit back. Okay. So now, exactly the computation of total income concept will be tested here. Yes, guys. Important question alert. Sunny. Yes. Important question alert. IDT Mandeep sir will be coming by 9 p.m. So don't worry about IDT, guys. First, let us focus on our DT. Then IDT will be taken care of by Mandeep sir. Yes. Computation of total income concept. Correct. Exactly. So this is related to question number 5B. IDT will be taken by Mandeep sir. Manoj, how many times will you ask this question? This is not correct. This is not fair. Even I am also feeling very much hungry, Kushpu. I should also want some dinner break, but okay, we'll take dinner break after completion of this only. So you can just watch, you can just eat while watching this. So separate dinner break will not be provided. So please, sorry for that. Yes, Sunny, that's the spirit. There is no dinner break. We'll be having dinner while watching only. No separate dinner break for us. Super, Sunny, that's the spirit. Kushbu, you have to learn from Sunny. So yes, guys, done is done. Now, complete focus on this question. Okay, 5B. Please decrease the size of your video now. What can I do, Jahnavi? What do you mean exactly? I did not understand your point. Okay, so check this. The tax rates for individual, HUF, AOP, BOI, AJP. I'm not explaining how many types of persons are there, what is individual, what is HUF, all that stuff I will not be explaining now. But remember, there are two types of tax regimes. First one, default tax regime. First one, default tax regime. In this, we are having two things. Section 115 BAC. In the question, if they have given only section 115 BAC, or if they have given only section 115 BAC subsection 1A, or if they have given in the question asking you to calculate the tax liability as per the new regime, or if they have given the question only to calculate the tax liability, that's it. Nothing they have mentioned about the tax regime. Always remember, in these four cases, you have to apply only default tax regime only. In these four cases, you have to apply only default tax regime only. If you want to apply optional tax regime rates, they will specify. They will give you clues shifting out of default tax regime. Okay. I understood, Manoj. I have reduced the size. So please check this. Section shifting out of default or optional tax regime, or if they have asked you to calculate the tax liability using section 115 BAC subsection 6 or calculate the tax liability using old tax regime, all these cases you have to apply optional tax regimes only. You have to apply optional tax regimes only. These are super most important. So first you have to get clarity on this aspect. For your exam, what is the default tax regime rates which are applicable? So the first one, if your total income is up to 3 lakhs, it is nil. If it is more than 3 lakh but up to 7 lakh, it is 5%. More than 7 but up to 10, 10%. More than 10 but up to 12, 15%. More than 12 but up to 15, it is 20 percentage, and more than 15, it is 30 percentage. So simple. Up to 3 lakhs, nil. More than 3 but up to 7, 5. More than 7 but up to 10, 10. More than 10 but up to 12, 15. More than 12 but up to 15, 20. More than 15, 30. That's it. These are default tax regime rates. Now the most important, optional tax rates, also called as normal tax rates. Case 1, if you are individual HUF, AOP, BOI, AJP, if your total income is up to 2,50,000, the tax rate is nil. More than 2.5 up to 5, 5%. More than 5 up to 10, 20%. More than 10, 30%. Simple. These tax rates, there is no amendment. The only amendment is there in this topic. Up to 3, nil. More than 3 but up to 7, 5%. More than 7 but up to 10, 10%. More than 10 but up to 12, 15. More than 12 but up to 15, 20. More than 15, 30%. Okay. Next. This is also done. Case 2, resident senior citizen. Case 2, resident senior citizen. Resident plus his or her age should be 60 years or more but less than 80 years. His or her age should be 60 years or more but less than 80 years. Instead of 2.5 lakh, up to 3 lakh, nil. More than 3 but up to 5, 5%. More than 5 but up to 10, 20%. More than 10, 30%. Easy, guys. Super senior citizen, up to 5 lakh, nil. More than 5 up to 10, 20. More than 10, 30%. These rates, there is no amendment. The only amendment is taking place in default tax regime. So after this, surcharge is the most important. I am expecting a definite one MCQ from this surcharge. Okay. So yes, if your total income is up to 50 lakhs, nil. More than 50 up to 1 crore, 10%. More than 1 CR up to 2 crores, 15%. More than 2 CR up to 5 crores, 25%. More than 5 crore, 37%. But only remember one thing. If default tax regime is followed, maximum surcharge which is applicable is 25% only and not 37%. 25% only and not 37%. Another thing, you have to remember these 4 special incomes. For these 4 special incomes, the tax rate is, the maximum surcharge rate will be only 15%. The maximum surcharge rate will be only 15%. So with this, now let us focus on total income and tax liability questions. Again, I am saying I want your 100% out of this. So now let us move to that point. Let me just check that. This is the most important thing. Okay. Guys, now I am explaining 5B question. I want your 100% attention to this. So yes. Guys, are you there or not? Just give me a quick heads up. The most important thing. Super, Jahnavi. Thanks for the response. So check this. Please open page number 28 from Super 50 Concepts PDF. Thank you, Murali. Super Sunny. Thanks. So first one, only remember these things. That's it. Only remember these things. That's it. In case of IFS, standard deduction of 75,000 would be applicable for default tax regime, 50,000 for optional tax regime. But these exemptions are applicable only in optional tax regime, which means whatever the points which I have mentioned here is not applicable for default. HRA exemption, we already know this. LTC, leave travel concession. Free meals exemption up to 50 rupees, exempted. That is only applicable for optional, not applicable for default. Allowances under section 10 clause 14. It is only applicable except DTC. It is only applicable except DTC. Sir, what is the meaning of DTC? Daily allowance, traveling allowance, transport allowance, and CFR. Conveyance allowance and CFR. Conveyance allowance. Entertainment allowance and professional allowance are also applicable only for optional tax regime. Are also only applicable for optional tax regime. Please by heart these points, guys. Easy points. This is the super important. Someone have asked about income from house property adjustment in case of default tax regime, but now listen, this is the point. In case of default tax regime, interest deduction for self-occupied property is not available. Interest deduction for self-occupied property is not available for default tax regime. Second, set off of house property loss against any other income is not allowed. If you remember, house property loss can be carried forward against any other head of income, but maximum amount is 2 lakhs. Sir, that point just now you have explained. Yes, Baba. But the condition is pretty simple. If you are going for default tax regime, you cannot set off that house property loss against any other income. Not only that, carry forwarding of such loss is also not allowed. Carry forwarding of such loss is also not allowed. You have to remember this point also, super important. So there is one question relating to set off in super 35 questions. So please solve these questions. Nothing will be there as new point. Only new point is you cannot carry forward the loss in case of default tax regime. Carry forward house property loss. PGBP. In case of PGBP, additional depreciation is not allowed for default tax regime. In case of PGBP, additional depreciation is not allowed for default tax regime. And next one, scientific research expenditure is also, if the donation is given to outsiders, this is also allowed as deduction. This is also not allowed as deduction. Okay. The most important chapter 6A deductions are not allowed for default tax regime. 6A deductions, 80C, 80D, 80F, 80F is not there, 80E, 80G, 80I, 80IA, 80RRB, 80QQB. All those deductions are not applicable if you are following default tax regime, except 80CCD subsection 2, CCH subsection 2, JJAA. Other than these points, nothing is applicable for default tax regime. Nothing is applicable for default tax regime. So what I have did is the most important deductions under chapter 6A, I have clearly marked it here. So what you have to do, you have to go through all these deductions. Out of this also, the most important deduction which they are going to pick is this 80C, 80D, 80G. So these definitions, 80JJAA also, they are mainly focusing on these points only. They are mainly focusing on these points only. Okay. So with this, let us quickly solve one question related to this point. So which question shall we solve? This question let us solve. Mr. Pavan question, very, very important. Illustration number 26, let us solve. Just a moment, guys. Hmm. Thank you, Soundarya. Thank you, Vivek. Thank you so much. So now let us check this illustration number 26, the most important thing. The question is very simple, guys. Array lucky, the question PDF is already there in the Telegram group, so please check that. Don't ask repeated questions, those are very much irritating for us. Try to understand from our perspective also. So check this. Annual value of the, let out, see here in the total income question, they will only give like this. You are required to calculate the total taxable income and his taxable liability for the assessment year under the default also and the optional tax also. You have to calculate the total income as per both the regimes, and you have to also calculate the tax liability also. So quickly check this. Annual value of the let out property. This we have already know that this is taxable in income from house property. This is net annual value, but you already know that 30% will be standard deduction. So the balance amount will be taxable. Okay, fine. Next part. PGBP of manufacturing business after deducting normal depreciation of 8,000 and additional depreciation of this 4,000. Just now I have explained this additional depreciation is not applicable for default tax regime, which means what? While calculating default tax regime, I will be adding this 4,000 rupees. But in normal tax regime, additional depreciation will be allowed. Super. Next. Interest received on fixed deposit from bank. This is 1 lakh rupees. Sunny, don't respond to all those messages. You please focus on what we are discussing. They will understand. Don't worry. Okay. Unnecessarily your time will be getting wasted. Okay, Sunny? Focus. Interest received from company deposits, that is also 60,000 rupees. These both are taxable under income from other sources. The next point. Savings bank account interest received by minor son of Mr. Pawan. Arey Baba, you already know that minor child income will be clubbed. But if the minor child income will be clubbed, they are eligible for exemption of up to 1500 rupees. Up to 1500 rupees. But this is only applicable for optional tax regime. This is the new point which you have to understand. Okay, next part. He contributed the following amounts by the check. First one is Sukanya Samriddhi scheme in the name of his minor daughter. Guys, this point is there in 80C point. This is nothing but chapter 6A deduction. So this will be allowed as chapter 6A reduction. Next one, own contribution to recognized provident fund. This is also covered in 80C. So this is also allowed as deduction. Prime Minister's National Relief Fund. This is given in 80G. But just now I have explained whatever the 6A reductions which you have covered now, they are only applicable for optional tax regime, which means for default tax regime, all these 6A reductions are not applicable. So super, guys. So the next part, income from house property, the 30% standard deduction they will take, which means what? From that 60,000, if you calculate only 70%, they have got this 42,000. Income from business, normal provisions 5,36,000 would be applicable, but default 5,40,000. Other sources, the same amount is taxable. So now you have to take the gross total income 7,38,000 and 7,43,000. Chapter 6A deductions, if you check, nothing is available in case of default tax regime, but whatever the payments which they have made, 25,000 and 30,000, 55,000. So that is allowed under section 80C. And the next one is this 80G, also 20,000 is allowed as deduction. So if you add these 2 points, you will be getting 6,63,000, and here the income is 7,43,000. Now you have to do what? Tax liability. Now you have to calculate what? Tax liability. Sir, how to calculate this tax liability? Arey Baba, just now I have explained the tax rates, correct? The same logics you have to apply. Okay. Yes. Just a moment. Please check with this name Vivek, BCCA hyphen paper 7A hyphen Raviteja sir. You will understand that. Okay, other sources. So this point is also done. Guys, here I am giving you the most important tip to solve this 5P question. In exam, they will only give some 3 to 4 points, which you will easily understand. 3 to 4 points for sure. 1 point may be new for you. Even if the point is new for you, don't just leave the question, because there are high chances that you will definitely get step marking in this total income or tax liability question, because the other question is set off carry forward, which is easy 7 marks will be there in your pocket. Okay, so now what you have to do, the 6A deductions are also only applicable for default tax regime, sir. But now what are the important deductions which I have to do? 80C please check, 80D please check, 80G also please check. Okay, not only this, we are having these CCD subsection 2, most important, 80CCC. Excellent deduction it is. Please don't ignore this. Because of time constraints, I'm not explaining, but everything I have summarized here very nicely. So you can just go through all these points. Okay. So now if you check the marks, I mean, how many marks and all we are having? 2A, 2B question done. 2A, 2B done. 5A, 5B also done. 4A, 4B also we have done with IFOS. We have done with IFOS. So now let us quickly cover some important areas from the capital gains section. Okay. So now let us quickly cover from capital gains section. Baba, now what I am trying to cover in this capital gain section is try to understand. Okay, the most important concept in this capital gain section is, first let us directly come to the capital gain computation. First let us directly come to the capital gain computation. Always remember guys, while calculating capital gain, you will always start with full value of consideration or sale consideration. From this, you have to deduct expenses on transfer. If you deduct expenses on transfer from full value of consideration or sale consideration, then you will get net sale consideration. Then you will get net sale consideration. From net sale consideration, you have to deduct cost of acquisition. From that, you have to deduct cost of improvements. Then you will get gross short-term capital gain or long-term capital gain. From these, you have to deduct exemptions under section 54 series. Then you will be getting taxable short-term capital gain or long-term capital gain. But one thing you have to remember, if this long-term capital asset is transferred before 23rd July 2024, instead of cost of acquisition, you have to take indexed cost of acquisition. Instead of cost of improvements, you have to take indexed cost of improvement. So this is the most important points you have to remember. Guys, because of the time constraint, I'm not explaining all the concepts. So I will be explaining you whatever the concepts which you have to go through. If you have any doubts, you can definitely cover in the Super 35 concepts video, wherein I have clearly explained the capital gains section along with the problems also. So must go through those points, guys. Again, I am repeating. I am saying for the sake of your benefit only, please don't ignore capital gains. From my side, I have done everything. So what you have to do is, if you are a Telugu student, if you are a student who understands English well, please go through the Super 35 questions YouTube video wherein I have explained this capital gain brilliantly. Now I will only explain what areas to be focused. So you can just open the timestamps and check wherein I have explained the capital gains and keep at some 1.5x or 1.75x and quickly check the important areas where I am saying now. So the first point what you have to understand is you have to check this part. Treatment of advance money forfeiture. The most important thing. You have to check this statement of advance money forfeiture. Next one. This is the super important section which you should not ignore. Section 45 subsection 1a. Please go through this section and they will definitely ask one question maybe directly from this concept also. So you should not ignore this. So the next one, section 45 subsection 2, another most important concept. You should not ignore this point. So next, section 45 subsection 5. It is nothing but compulsory acquisition of immovable property by central government and compensation is determined by the central government or RBI. So these three sections you have to definitely go through. After this, the super 5-star important section according to me is section 50C. Guys, trust me, I have kept super amount of hard work. I did lot of hard work and I have clearly explained in super 35 questions regarding this capital gains. So it is not possible for me to again go through to all those concepts because it is very much important and I have already covered in depth there. So what you have to do, you have to definitely go through those concepts. Tomorrow morning, the moment you wake up, please see capital gain concepts, whatever I have explained in depth. You have to refer this. Again, I am saying one question will be definitely asked and 2 MCQs, which means 11 marks out of 50 is not a small thing. So you have to definitely focus on that part. After this, the most important, you have to check 54 exemption and 54F also you have to check, and after that 54 EC. 3 exemptions you have to check at least: 54, 54 EC, 54F. Those are also super important exemptions. So at least these points you have to cover. At least these points you have to cover. Okay. Yes. So at least these points you have to cover. Then what will happen? Your capital gains concepts are also very much clear. Correct? So which means this, what questions we have completed: residential status done, salaries done, capital gains done, other sources done, set off done, default versus optional also done. Income from house property, I'm not revising now because the reason is also pretty simple. I have already explained it very clearly in super 35 concepts related video. I have explained it very clearly, so you can easily refer that and you will easily understand the things. So the last question which is there is PGBP. So the last question which is there is PGBP. Okay. So let's quickly come to this. Okay. In this PGBP, you can directly start with this depreciation concept. You can directly start with this depreciation concept. Okay. Don't just waste the time. You can directly start with depreciation, and I have already made a detailed exam oriented batch. It have come to some 5 hours. I'm not asking you to watch the entire things. Just open the timestamps and check where I have explained about depreciation and just go through that points. Okay. The most important, these rates of depreciation you have to check. Okay. Because the same rates of depreciation they will be asking in the exam. Okay. The same rates of depreciation they will be asking in the exam. So please check these points. There are many MCQs wherein I have checked. Even if you have watched the MCQs videos also, you will easily understand that most of the MCQs, if they are asking from PGBP, they are asking only about depreciation. So there are high chances that they will once again repeat a question relating to this. This is the super important chart, master chart, I can say. Please definitely go through this chart. After this, next thing what I want you to most important, additional depreciation you have to understand. Additional depreciation, super important. So please go through that. Okay, the rates of additional depreciation, 10% in normal cases, 20% in normal cases, but if it is put to use for less than 180 days, then 10% you have to applicable. After this, the most important point is this actual cost of assets acquired. Another super important point. After this, scientific research. Just go through this section, easy section. 35 AD is also there. That is also brilliant section, definite important, 100% important, which you should not miss this. So section 35 AD, specified business. After this, deductions under section 36, super important. In this, what you have to check is second point, third point, fourth point, fifth point, sixth point, seventh point. These are super important things which you should not miss. After this, section 37, another super important section which you should not miss. So this also you have to refer all the things. After this, disallowed expenditures. After this, disallowed expenditure. Okay. Okay, so check this. This is super important. After this is also super important. If you are making payment to any person, you have to deduct TDS. If you forget to deduct TDS, or you have deducted but did not made the payment, in both the cases, if you have made the payment to non-resident, then 100% of such expenditure would be disallowed. If you have made the payment to the resident, then 30% of such expenditure would be disallowed. Very easy. So after this, the most important, 40A clause 2, 40A clause 3, super important is this 43B, tire benefits, which I can say. T for taxes, I for interest, E for employee, R for railways. For these expenses will be allowed as deduction, but the condition is payment should be made up to the due date of filing of return of income. If the payment is made after the due date, then deduction will be allowed in the year of payment. Okay. So the next part. This section 44 AD. This I will explain now. So listen. This is applicable for business persons. If your turnover in the previous year is up to 2 crore rupees, then you will be treated as a small SSE. If you are a small SSE, don't maintain books of accounts and don't need of tax audit also. But you have to declare minimum 8% or 6% of the turnover or gross receipts as your PGBP income. This is not tax. This is PGBP income. Okay. Again, I am saying I have solved 3 very important questions in Super 35. So after waking up, you just have to open capital gains concepts and please check the timelines and just refer whatever important I have explained. And after that, when you come to this PGBP also, you have to do the same exercise, but without referring this PGBP. If you go to the exam, trust me guys, it is not at all beneficial for you, because maybe MCQs also they can easily ask at least 2 MCQs. So which you will be messed up if you ignore this entire PGBP. Okay. So the next part, 44 ADA. up to 50 lakhs, then you have to offer 50 percentage. You can, no need of maintaining books of accounts and no need of tax audit also. Okay, very, very easy part. After this, please come to 44AB. I have explained the importance of these sections specifically while explaining super 35 questions. But again, I am saying, if you do not solve the super 35 questions, all our efforts would be completely wasted, because I can totally correlate the amount of hard work which you have paid while preparing for these subjects. Okay. Yes, guys. So you should not ignore just for this one night. Please make enough hard work for your direct taxes. Every effort will be counted. So the moment you see your results, every effort will be appreciated. Nothing will be wasted. So all you have to do is please get some extra energy and just refer to whatever I am saying, because all these things are very, 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 very important. The last important section is this section 40 subsection B. So my sincere advice is open PGBP and solve whatever the super 35 questions which I have explained, and also therein I have explained some very, very important concepts also. So you have to go through those concepts definitely. Okay, so after this, I think I have explained all the questions except this house property, because this house property I cannot explain now, because the reason is same. I have already explained very much in depth in the super 35. So you can easily watch that point. But the last, I just want to touch upon some important sections when it comes to, one second. Yeah, this live video will be uploaded, Fatima. Don't worry. Meena, thank you so much. Thank you so much. Thanks for your response. Your responses made this session interactive is what I am feeling. So without you, this section would not be this much interactive. So thanks for all the participants who have participated. So now the last few concepts which I want you to go through is, if you open these, where it is super 35, so super 50 concepts, if you check this, these are the most important deductions which you should not miss. 80C you should not miss. CCD subsection 1 you should not miss. CCD subsection 2 also you should not miss. CCE also you should not miss. CCD subsection 1B also you should not miss. Okay. So this is done. So after this, 80G is also very important, guys. You should not ignore. Most important, DDB. If you are having any disabled relative who is dependent on you, if she is having a severe disability, 1,25,000 would be allowed as deduction. 75,000 would be allowed as deduction. All things you have to check this most important sections. DDB is also most important. QQB, super important. MCQs, they will definitely ask this. RRB also, they will ask this. Next, TTA done. TTB also done. So I think we have covered almost all the topics, guys. But trust me, I just want to give one disclaimer. Okay. So come on, guys. I can totally understood the amount of hard work which you have been keeping from the past 1 or 2 months. From the moment you have started preparation of your exams, I can totally correlate how much of the sleepless nights you have been worrying about your exams and all. I can totally understand. But trust me, guys, only just some more days you have to continue this effort. When it comes to the subject of direct taxes, I have equally contributed a lot of hard work only for getting benefits for you. What I did is, first I have come up with exam oriented batch for all the students. For those students who are good at Telugu and English, I have provided it in mixed language. Super in-depth revision I have made. The most of the students have been continuously messaging me regarding that. Therefore, I have felt more happier. So I thought of don't stopping it right now. So what I did is I have again come up with another concept which is called super 35 questions, but this time I have made in complete English. So what you have to check is the amount of efforts which you have been investing in the from the past 1 month or 2 months or whatever the case is. So what you have to do is whatever the questions which I have been explained now, I have just explained very briefly, but what you have to do is if the time permits, definitely you have to refer super 35 questions. That is my sincere suggestion, because not only that, even MCQs also I have provided with a detailed video wherein I have covered 135 super MCQs. 135 super MCQs I have covered. If you just solve those MCQs, just it is some 3 hours or something it have came, you can just watch it 1.5 and you will be easily completed in 1.5 hours. Trust me guys, that will give you super amount of confidence. If you just watch those MCQs video, you will easily get 24 out of 30. I mean, from DT specifically, you will get some out of 6 MCQs. Easily 5 marks you will get from the 12 marks. Okay. Easy chances. Easily you will score a minimum of 5 MCQs out of those 6. Trust me, only 1 hour, 1.5 hour. If you check, that is more sufficient. So after this, after MCQs is done, the morning after waking up, what you have to do is quickly open capital gains and go through the important concepts which I have explained just now. PGBP question, don't spend much amount of time, but still go through some important sections as to whatever I have explained just now. My advice is at least don't miss this 44 ADA. I'm expecting a question out of these 2 sections. If a question out of these 2 sections comes in the exam, that is a jackpot for you. What you have to do, you just have to multiply with 6% or 8% or 50%. That's it. Nothing you have to do other than this. Okay. It is very, 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 very easier. So after this, capital gains you have to check, and you have to please watch that only for it is in 1.5 hour you can complete all the important concepts. So don't watch entire things, just go to timestamps and just check for that and watch for entire thing. Okay, once again I am saying guys, in these professional exams you will definitely not understand the question paper completely, which means either 1 question or 2 questions will be definitely out of your knowledge. So don't get surprised after seeing those questions. Firstly, whatever the time which they have given for you to read the question, please read the question very, very carefully and please select those questions which are, which can be easy for you to solve. And you have to solve only those questions which you are very much comfortable. Okay. Other than this, don't check for any new questions or don't do unnecessary stunts or risks in the exam. The starting 10 minutes of paper will decide whether you are going to pass the paper or not. Whether it is DT or IDT, the same approach you have to follow. First, you have to filter all the questions which you can easily solve. So my thinking is like that most of the students will know how to solve income from house property. But since they have been coupled the question with PGBP, most of the students will face the difficulty. The same logic apply to capital gains also. Most of the students are very much comfortable in what should I say, other sources. But the thing is, when it comes to capital gains, they will be feeling it a little bit difficult. So what I did is I have really taken some 6 super important questions from Super 35. And if you just watch those questions, trust me guys, the amount of confidence which you will get after solving those questions is simply unmatchable. And just go to the exam with a lot of courage, and how the paper goes, still it should not be affected to other papers, because these are professional exams. Definitely 1 or 2 exams they may give it difficult, and the other exams they will give it easier. Okay, that's it guys. So that's it from my side. So what you have to do is just sit back and relax, and Mandeep sir will be joining at 9 p.m. So you will be sharing the description, and every detail will be provided to you. So once again, thank you so much guys. Thank you so much for making this war room session very, very interactive. So I too miss you, Soundarya, Meena, and Kushbu. So we'll definitely meet again. So once your results got announced, you have to definitely text me that, sir, we have passed it, because that is the only motivation which we will get from the students like you. So I am expecting that whoever the students have watched this DT, I mean, not only DT, any other subject, and whoever the student who have prepared his complete efforts, whoever have given, he will definitely pass this. Okay. So that's it, guys. Thank you so much, guys. Once again, Danush, you have made it really interactive. Vivek also. Sunny, you have made it very interactive. Soundarya, Dino Gaming, Sushma, Shanmukh, Kushbu, every guys, all of you have made it very, 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 very interesting. Xavier, bye bye, bye bye. So that's it, guys. We'll meet it again. So thank you so much and very all the best. We'll meet afterwards. So thank you.